Are you struggling to manage your income and with respect to savings and expenses? And are you feeling stressed out when it comes to achieving your financial goals? So today's meeting, it's all about do it yourself, your personal finance. So what is this personal finance and how to do it by yourself? So I'm just going to reveal everything about personal finance and how to do it yourself. So I'm really excited because you are going to do it yourself, and you are hell lot of time for the next 20 days. You can from home you can do, and this is very critical. I thought I should share everything whatever I know, because what will happen in the next few days, we never know what will happen in the next few months. It's really scary, and it took me several years to understand, to put together what is exactly the personal finance, how to choose the right things. And uh, I thought when I share this with you at this moment, it will be really, really helpful for so many people. And you can share this video with your friends, your family, your relatives, and you can do it yourself, your personal finance, because this is very, very critical situation. Understanding where you are, whatever you have done till now, and taking an informed decision, because one wrong decision will ruin your entire whatever you've done till now, whatever you have built up till now. And one wrong decision can stop your business, or can put your life in jeopardy. So hope you understand what I'm saying. And without much ado, let me say about getting into it, let me say about myself. I'm Ganesan, a millionaire coach and author of the book Money Leaks. This is my work of for the last 13 years. I learned, and I worked with so many clients, and I read in so many books. I'm putting it together. I'm just saying it as a one of the ways to doing it yourself in with respect to personal finance in your life. So, what is personal finance? Managing your own personal income. As simple as that. If you're able to manage your income, set up your if you're able to set up your risk protection, and if you're able to invest for yourself, for your future, and that's it. These two aspects: one investment, one is insurance, and everything will come under both these things. And when it comes to risk protection, people think in a wrong way. So, what is risk protection? For example, insurance and investments are always mixed together. People think protection is really needed, and these are separate things. Insurance and investments will never go together, because when it comes to insurance, it's purely for risk protection. If you're not there, what will happen to your family? And family in the sense, now both men and women are dependent on each other. In this current scenario, both of you should be insured separately, and both are needed for each other, at least in personal finance, because you are dependent on each other's income, and you take a bigger home loan or bigger personal loan, and where you both need to work together for your children, for your family, and in all aspects I'm saying. uh, and when it comes to investment, it's all about returns, liquidity, safety. These three aspects needs to be considered before investing in anything. So insurance is separate, investment is separate. So this is, if you are able to do it yourself, again I'm repeating, that is personal finance. And what is real insurance which is needed in your life? So there are four insurance which you need to take. First is term insurance. For example, can you uh, assure your family, if I'm not there, you are going to be safe, financially safe. Emotional safety is, no one can come and say give a safety to them, no one can console them. That is totally a different ball game. Financially, what they will do, and why you should take a bigger insurance. People take a insurance policy, in the name of insurance policy. They take 10 lakhs, 15, 20, at the max 25 lakhs, not more than that, because the premium tends to go higher. You may need to pay a minimum premium of 1 lakh or 2 lakh to get a insurance policy in the range of coverage in the range of 25 to 30 lakhs. And just think of, if you're paying and all the insurance policy for 20 years, if you're paying a premium of for us insurance policy of 20 lakhs, at the end of 20th year you're going to get 40 lakhs, double the premium. That is what they offer. And returns, it comes around 4.5%, 4.5, not more than that, 4.5, 5%. And purely from insurance point of view, if you're working, considering your salary is around 10 lakhs now, and for the next 20 years, for sure it is going to increase. For sure your business is going to improve, or your salary is going to be increased in your company. In that, Even if you take 10 lakhs as a standard income for the next 20 years, you are going to end up having 22 crores, and that 2 crores is not going to be there for your family. Suppose if you're not there immediately. And what will happen if the pending EMIs you left out, the personal loans, and what will happen to your child education? The third point, the most important thing, because you are earning, both of you are earning, are doing whatever you want, and the house, whatever you are buying, and everything is for your children and for you to live together. And if you're not there, what will happen to the child education? You can't leave as it is just because you're no more, right? So that's just for that case, term insurance, you should take it for at least 2 to 3 crores in the current scenario. Hopefully, you can increase going by the number of years. Probably after 3 5 years, you can increase your term insurance coverage. So this is pure term insurance, and once you take it, if you're not there, your family is going to get a complete protection. And the next one is health insurance. Suppose, for example, during the crisis last month, my grandmother was not well, and when we admitted uh, for just simple airline fracture, we were forced to spend around 1 lakh. As due to our age, we are not able to take a health insurance policy, and we were able to manage to spend that amount. Considering if you're having a health insurance, just 10% of it, or maximum 10%, 5 to 10% of your only you will be spending from your pocket, and remaining will be spent by the health insurance company. That is the reason, if you're living in a tier 1 city or tier 2 city like Chennai, Coimbatore, or Madurai, or Bangalore, or any other place, tier 1 tier 2 cities, I'm saying, you should have a insurance policy worth at least 10 lakhs, so that you will be able to manage the hospital expenses. And the third most thing is critical illness policy. Suppose if you're for example, if you're one if you're getting admitted, all the expenses will be taken care by health insurance company. Suppose if you're getting into the operation like critical illness like angio or anything related to heart ailment, you need to take rest for at least 1 to 2 months, and you will be forced to go out, even if you are doing a business or you're in your company, because you can't take leave for a much longer time. Even if you're running your own business, you need to go and do all the other things, because everything is dependent on you. In this scenario, if you're having a critical illness policy, that critical illness policy can give you a immediate settlement of 10 to 15 lakhs, or based on the coverage you are taken. And it's a one time settlement immediately given based on the diagnosis report, and all the conditions applies are there, so it will be immediate. So critical illness is more critical, considering what has happened right now in case of coronavirus spreading all across. And yeah, even the government has said that now. Nirmala Sitharaman, our finance minister, said that all the doctors and uh, the people who are working on the ground, they will be covered for minimum of 50 lakhs. Now you can understand the importance of health insurance for everybody. This is the time you should take. And finally, the last insurance is a personal accident policy, considering everybody are traveling, airways and car, bike, everything. You are using everything. And the number one reason for people to die in India is accident. Even if you're careful, something can happen, you know that. And that is the reason India is number one with respect to accidents. And you should have a personal accident policy, even if it is a fracture or certain things. If you're not able to manage, this personal accident policy can give you a relief for some certain weeks, so that you can be at home, take rest, and then go back to your normal routine. So these four policies are really essential: a term insurance, health insurance, a critical illness policy, and finally a personal accident policy. Your risk protection is completely taken care. And are you worried about how much amount you need to spend on this? Just think about, you're for a 30-year-old, the entire policy coverage for all these four things will not even cross 30,000. And this is the time you are healthy and you are fit, and policy issuance will be easier, and you will be getting full coverage on all these policies. So it is wise to take policies once you are in. And even if you are in your 40s, it's not never late, because you are going to coverage till your 80s or 90s when it comes to term insurance and all these health insurance things. So get a complete risk protection, which is almost like really needed at this moment. Consider you are investing separately, and all of a sudden after 10 years, something has happened to your family member. You will be breaking all your investment just to protect and save that person. That is the reason you should have a separate health insurance policy. Every policy uh, has its own benefits, has its own reasons. So just go for it. What I'm saying is recommending are the really needed one. So if you are setting up your own personal finance right now, these are the things you should do. And when it comes to investment, it doesn't start with a product end product. It doesn't start with, now the market is down, can I go and invest in stock market, can I invest in mutual funds, and I'm just safe, I just need conservative person, I want to get into the fixed deposits itself. It's not that. What are your financial goals? If you're married, if you're a kid, the financial, one of the best topmost financial goal will be your child education more than 18 years down the lane, and his marriage or her marriage, and probably your retirement for the next 20, 30 years. What is your retirement corpus you need? Because it's not that your life is going to end at 60. If you're having money, you can live till 80, 90, or even 100, right? So for the next 20, 30 years, your one third of the life is dependent on to the second part. The first 30 years you're going to earn, the next 30 years you are going to spend. So that is how your life is separate, almost divided. So you should be careful like how much you are saving and investing, so that your next 20, 30 years are taken care. Say for example, you are, though you are no more, your family member will be there and they may be in need of money. What are you going to give it to them? So retirement planning, the top three important financial goals, and your kids education, their marriage, and your retirement. Along with this, what else can be a financial goal? Your yearly vacation. People postpone their vacation just because they don't have money, or they just go to plan it with EMIs. This is what they do. Yeah, your vacation, your yearly child education, your child school expenses, your college expenses, and then your yearly insurance policies, investments. I'll call it as investment rather than expense, because it is going to protect you. So how are you going to plan it out? Your car insurance, which is more really needed, right? So all these things, five insurance policy, invest yearly package, yearly premium itself will come down to 30 to 40,000. You need to plan for it separately. And along with that, whatever miscellaneous expense which may happen along with that, this is also needs to be fun. And along with all these financial goals, the first financial goal you should have in your life is having an emergency fund. Because right now the crisis which is happening, for the next 20 days you are getting locked down, and the economic impact is so huge. I'll talk about the economic impact and how to overcome it with respect to your personal finance in the coming days. But this is a reason we say that you should have emergency fund, having the next at least 6 months of 6 months of your family expense. Say for example, your expense is 50,000. For the next 6 months you should have at least 3 lakhs in your emergency fund, so you can be a bit relieved, not worried about EMIs, and not worried about certain things, because you know that within 6 months everything will settle down. You can come out and do whatever you want, progressing with your routines, or you can spend on your improving yourself. Self improvement is much needed during these times. That is how the market will, that is how your business will grow, that is how your career growth will happen. So you should focus on that. And finally, your financial goals are done now. The top financial goals: emergency fund, your kids education, your yearly miscellaneous expenses, buying a car in 5 years, home, paying out your home loans. All these things can be planned only when you sit and do your personal finance. This is what comes under personal finance. Now comes the end product, which are the investments. So what are the investments available? The first thing can be a mutual fund. And every mutual fund will not invest in stock market. There are funds which invest in stocks, there are funds which never invest in stocks. There are two things separately. And there are third option, which has a combination of equity and debt together, stock market, as well as the one which is not invested in stock market. These are the funds which invest in commercial deposits of banks, bank deposits, AAA related, AAA bonds of the companies. This is which will not default. These are the things which is hybrid. We call it a hybrid mutual funds. So these are the varieties of mutual funds which is available based on your financial goals. At 10R, you can invest. Say for example, for retirement planning, which is more than 15, 20 years or 30 years, you can choose equity mutual fund, and even you can invest in stock market directly. So this is how you choose. If you are choosing an investment policy for the next 25 years, and you are investing a premium of 1 lakh, and after 25 years you are going to get 50-55 lakhs. And just think about, will it be enough for the next 30 years? Say at age of 60 you are getting 50 lakhs, and for the next 30 years, will it be enough? A simple calculation. I said your personal expenses when at 30 right now is around 50,000, and with next 30 years, how much it will increase? Because considering the inflation, once in 7 years it's going to increase. It's going to get doubled. So in 34 times there is a possibility of getting double. So probably you will be ending up spending 2 to 2.5 lakhs per month. I'm saying per month at the age of 60, 30 years from now. So if that is the case, within a year's time, you're going to spend 30 lakhs. And within the second year, you're going to spend out the entire 50 lakhs. Are you going to manage with 50 lakhs? So consider before taking a long-term insurance policies, consider will it be enough? Will it be enough for my at least next 10 years? It should be there. At least till 70, 75, it should be it should be available to manage your um, expenses. So if this is the case, how are you going to choose the equities and certain portion debts? And how about gold? You can have 10% of your investment investing only in gold. Considering all our families are having gold in the form of jewelries, if that constitutes more than 10%, I advise as an investment, don't invest in gold. If it is a personal thing, like if you want to gift to your loved ones, go ahead, you can buy jewelries, no one is going to stop you. But if it as an investment, don't go and invest, because already you have certain things, and you can use that for pledging during the time of when you are in need of money. That is what gold is. That's why they say it as safe haven. You can pledge it or you can sell it off at any point of time. The price will always be there. So that is the reason gold. So 10% of your portfolio for that. And real estate, you need a bigger amount. You should plan it well. Don't get into buying a house or buying a flat in the name of I need a. Emotionally, don't take a decision. And if you're getting emotional and taking a decision of buying a home, think about the EMIs, what you need to pay. Think about whatever I said in the last 10-15 minutes. Insurance, what you're going to do. And personal finance, what will happen to the other goods. If all your EMIs are going forward to your EMI, all earnings, I'm sorry, all your earnings, if you're going towards your EMI, how are you going to manage all your financial goals? At the age of 50, for 20 years from now, you are closing out all your EMIs and debts. But what will you do if you are starting? All the money needs, do you know what money needs? It needs a time. In 20 years time, money will compound like anything, but in 10 years time, you need to invest a lot of amount. From now, if you're investing, a general thumb rule, 15,000 rupees for 15 years at 15% returns can give you around 80 lakhs to 1 crore. This is a rule of 15. They call it in mutual funds. You can search it in Google. And do you know what will happen in the next 5 years? It's going to get doubled, close to 1.5 lakhs to 2 crores. Sorry, 1.5 crores to 2 crores. This is how the doubling will happen. Suppose if you're stopping that investment right now and you're paying out your EMIs, just think about what is going to happen. You need to invest not 15,000, you need to invest 20-25,000 in the coming months. And will you be able to sustain? Because expense is going to keep on increasing. Plan your investment first, and then and finally you need to look at increasing your assets, not increasing your liability. Buying a home for staying is not an asset, it's a liability, because it's not going to generate any returns. It's not going to be of any use to you, because you can't sell it out, because you're going to stay in it. Don't think that instead of paying rent, I'm paying EMI. If you're paying rent, remaining amount you can use it for investments, insurance, and everything. You can lead your life happily. If you're paying your EMIs, that is a biggest burden, because you want to close it out. And what will happen? You are at the back of the mind, you will have a thought process like, what will happen if my business is down for a couple of months? If my salary is not there for the next couple of months, what will happen? If I'm not there, what will my family do? All these things will come into your mind, and then you will not be able to take any decision. You will not look at improving yourself or get into the next phase of your career or business. So instead, why can't you live in a home, in a rented house, pay the rent, let the owner takes care of whatever he has done, and remaining amount you are investing, you are insuring yourself, doing everything by proper personal finance you are doing for yourself. And after 10 years you will end up having a huge sum of amount. And there was a interesting article in Economic Times, ET Wealth, last week. You can also browse it at Google Economic Times website. The ET Wealth says that at whatever the market condition, if you're staying invested in equity mutual fund for the 7 to 8 years period, it's going to give you double digit. Do you know the returns? The benchmark is 12%. At any point of time, it is going to give 14 to 15%. And that is the power of equity. So 8 to 10 years, if you are staying investor, you're going to get a double digit returns of at least 14 to 15%, which is going to, it is consider what are the other investment options which is giving you double digit returns. Nothing as of now. So if equity mutual fund is going to give you, choose get equity mutual fund. And once you get a sense of how these mutual funds work, how the stock market works, slowly get into stock market. Don't get into stock market without any understanding, just thinking like I'm going to create wealth, I'm going to make money on a monthly basis. Don't come with that attitude. So everything needs a planning. Allocate money for each of the financial goals, allocate money. And this is how you do the personal finance. Start with an insurance, the four types of insurance. Go back and see, you can all the term, health, critical illness, and personal accident policy. And when it comes to insurance, when it comes to investment, start with the financial goals, whatever related to money, if you want to do. And if you're getting stopped, start writing it down. My mentor says that whatever you want to achieve in life, you need to write it down, journal it down. So once you write it down, you know how much you need to allocate. And based on the financial goals, you can allocate how much money you want to invest in it. Then choose an investment product, and based on that, you will know whether that investment product is going to help in reaching your financial goals. And for retirement, as I said, with 50,000, I'll complete with this calculation. For 50,000, right now, in the next 25, 30 years, let's take 30 years, money will be, your monthly expenses getting to quadrupled, four times your current expense. So it will be, let's take a conservative approach of 2 lakhs you're going to spend at the age of 60. And in 1 year time, you need 24 lakhs. In 10 years, you need 2.5 crores. So if you are living by 80 or 90, think about how much money you need to have. At least if you have money of 3 to 4 crores, you can use it for spending in the last 10 years, and remaining you can keep invested and then reap the benefits of investing, compounding. So if you are in your 30s and 40s, this is the time you should start looking at doing your personal finance and start investing. Choose wise products. That's all. This is what you need to do. And why you need to right now, because you have 20 days of lockdown period, and sit with your life partner, do all whatever it takes to put it down and discuss everything, because you can set everything, your business separately, your income separately. And if you're salaried, you can do what you've done till now in the last 10, 20 years. What I have done, what should I do for the next 20 years, so that the last 20, 30 years will be much more happier in my life. And all these are really needed. So if you need any help, because you are sitting together, and just take an action, start doing it. I reveal what is personal finance and how to achieve all your financial goals without much stress, and how to manage your income so that your expenses and savings are taken care, you are achieving everything in your financial life. So whatever, if it is even buying a car, buying a bike, you can plan it out, invest and achieve it. So use debts wisely. So don't go for debts just for the sake of ATC, because certain people buy, invest in real estate thinking that I can show the home loan and reap the benefits. Uh, Without debt, you can invest more, you can have a happier life in the later part. Everything you don't need to do right now, at this moment, because more than saving tax, you should have a free mind. You started earning just thinking that I can lead a happy life, but are you leading a happy life? You are creating a stress for yourself. Buying a home thinking I'll be happier, but then you're creating a stress for yourself. I need to close it down, because that is stopping me from the next level of growth. So think wise. If you need any help, just reach out to me. You can message me in the Facebook Messenger. And if you're watching it in YouTube, just subscribe to my channel. And hopefully this is day two. In the coming days, I'll share whatever I know in each of these nuances of investing separately, investing, insurance, and whatever related to money. So at the end of 21 days, you are having a complete control of your life, financial life especially. Thanks for watching. Please share this video with your friends, and share it on Facebook as much as you can, so that they also take a informed decision in their life. Hope you find this useful. Like it, share it. Thank you.